Welcome to Dalrymple Trading. My name's Nandis. We're going to be looking at the pre-market outlook for Thursday, the 4th of September, 2025. What we've seen with the S&P 500 pre-market is the market has been rallying upwards. Now, I keep coming back to the fact that we're in the middle of a very, very strong bull market in the US S&P 500. We saw the correction from the 6,500 level at the end of August, and then we corrected from the 3rd of September upwards. So what we're seeing is a continuation pattern by the bulls, buying into every opportunity to buy basically against the moving average, as we can see. So most likely we will test all-time highs just above 6,500. So at the moment, I have initiated a buy signal on this a couple of days back to bring us in alignment with the current trade. So if you were to trade this, make sure that you trade by reviewing a risk-reward ratio very carefully in a lower time frame, so you can manage risk that way. But as I said, there's definitely a bullish bias for the S&P 500. One thing to keep in mind is on the 17th of September, it's anticipated the Fed will cut rates. This is also another bullish indication, macroeconomically speaking, for a further rise in the S&P 500. So at this point, all indicators are showing bullish. Even if we do get a correction, it will be short-lived and the buyers will come back in and buy. So it's a fairly easy trade to take if you actually calculate the right risk to reward on this one. Moving across to WTI Crude Oil, what we saw yesterday was a correction downwards, a short correction. This was anticipated in my prior video. If you look back in the video prior, we said that there's a possibility that prices could go up and retest this level at $66 or potentially come down and retest at this level here, which is the 63 level. So what we've seen is a short happen, and I initiated the short up here, allowing prices to go down. So what I'm expecting now is prices to pull back into the range, and the bears will once again push prices down, and we're then looking at 61,500 as a bottom in terms of where that's headed. That's not 100%, but they're all probabilities that could happen. And at this point in time, bears are in charge of crude oil. And the reason why this has dropped predominantly is two reasons overnight or in the last 48 hours. One is that there's an expectation that OPEC will increase crude oil production, increasing supply, therefore reducing the price. The other reason is weak economic data from the US is showing reduced consumption of crude oil. So that's again another indicator of weak supply. And if we look at a slightly larger trending chart, we can see that we have actually been in a very, very strong bear move to the downside. We've seen this correction up to the upside, and that only lasted, well, from the middle of sort of August till the end of August, and then we've sort of gone downwards in the last 24 hours again. So at this point, it is definitely a bearish outlook. If you are willing to short this, you would want to wait for a pullback, for prices to pull back into the range, and we're going to push it down with the right signal and the risk to reward ratio. If you want to learn a little bit more about how I trade or how you can get involved with working with me, please visit my website, www.dalrympletrading.com. I do offer coaching sessions for anyone interested. I've only got a few spots left this month, so if you're interested, please book yourself a spot and learn how to do it like the pros. Happy trading.